Welcome to Trading Lounge and the Gold Silver report for the 28th of April. This is a monthly chart here, and I just really wanted to have a look at the volume here for this. And what I can see is that with the volume here, if we can just talk about that for a moment on the monthly chart, we can see that these bars coming down through here, we've seen increased volume in those bars coming down here. So that's what you'd call a trend. You'd call this a correction because the volume is diminishing as the market's coming down, but it picked up speed coming down here. So we've got this bar where this wave 4 is, that small little bar there with this, it's just got a small range on it, the high and the low, yet we've got a lot of volume on it here. So that tells me that there's a lot of volume that came in and bought and kept that range small there, so it soaked up all the sellers at that point. So that stopped that amount, that stopped that supply of sellers coming into the market. But at the same time, we're close to the end of the month now. It's the 28th today in Australia. So we can see that the volume here on this bar pushing up here is really quite low. So yeah, there's a few more days. We might be able to get something sort of reasonable out of it. But I'd have to say that at this stage, it's looking like this is divergence to the upside. So divergence is where the price goes up, but the volume doesn't go up. So you'll see that in your indicators, but you don't need your indicators. You can just see it in the volume. So we're getting an uptrend, but it's on lower volume. We know that there's good support here, but we're just not seeing that increased volume there for that. On the weekly chart, I wanted to talk about, we've had wave 4 pinned down here on the low here for this. But there's also a possibility that we can just rally up here in some type of corrective mode and then drop down here again. So that's what we also need to be a little bit mindful of. So in this case here, even though we haven't had a lot of volume here, we have seen increased volume in this little bit of the trend here. So that's something that's good. That's good news. Now, obviously, as I've mentioned a few times, when we talk about the trading levels, we talk about, well, we've got the medium level here, and then we've got the major level here, and the next important level is the 18. The 1720 is important as well, and the 1650 is also important as well, which makes up group 2 or another medium level at this low here for that at 1650. So yeah, so what I've been doing is this has been a bit of a tricky count here, and it can be counted in different ways. It's, when it's like that and it is tricky, we're better off saying, well, we don't know what it is, because it could be a variety of things. At the same time, we can go to the intraday basis and we can trade long and short and do all sorts of things. But from the bigger picture here, the 1800 is really a bit of a line in the sand. So if we found support on top of that, then that would be a truly positive move here, because we know that it was support over here and support over here, and then it became, it broke through the support. So now it's coming back up and checking that supply. So this is the point where it can fail. It can fail in a couple of ways. It can go to the 18 and fail. It could go to the 18 here and have a reaction here and have the first high above the level here, and then when it comes back to test it, basically fail at that point and then drop through it again. So the normal trade would be, on this top, on that second top here, or the top here, for that because then it will be telling us that this is now the closest largest number is the support at that point. So we don't have that yet. We've just arrived here at the 18 here. So that's really what we're talking about today. So we'll chuff in here and we'll look at it as this wave 4 low sitting on here at the moment for this, and look at it in a positive light to the upside. But within that positive light, we can look at it as, well, we can look at the logical thing to do here would be to look at it as wave 1 here and 2 here, and then wave 1 here and 2 here. because I can't call it 1, 2, 3 here, because this move here is a little bit small compared to wave 1. So the logical thing would be to look at this as wave 1 here and 2 here, then wave 1 and 2 here. Of course, we can look at it. I've got wave C here. We can look at it, of course, as an A wave, a B wave, and a C wave here as a corrective wave to the upside, and then come all the way down through here. But we couldn't call that in unless we breached a few things. So that low here to that high, in this case, we've got the 61.8% here for this wave 2, so that can play out there. I'll just move those out the way. So we seem to be getting a clear sort of breakdown here for this. So we can have that as wave 2 here. We could do that, and we would look for, well, we need to understand this here a little bit more in all of this. It also means too that, well, let's just go to the 1 hour chart to have a look at this in a bit more detail. So yesterday we're looking at this as 1 and 2, and then 1 and 2. We know that I kind of like this here as the A wave, the B wave, and the C wave down to this point here, because the wave C here was roughly the same length as wave A here. What I didn't like about it was wave C is normally lazy, and this one, in this case, it was really sharp here, so that really sort of bothers me. So we can go long here. We could even copy that. We could even go long above this high here now. But this move up through here really appears to be a little bit corrective here, and I say it's corrective because we've got overlapping wave structures with all of this in here, and it looks like an A wave and a B and a C or something, so it looks a little bit corrective here. We can obviously drag this across here, and we can like pretend to be hopeful with this and put this over here for this, but that's 1750 there. We wouldn't want to, if that becomes the retested resistance, then that confirms that we're going to be going down and making new lows in this market. But otherwise, we could look at this as some sort of move here. This is a little bit tricky to read, but we'd have to label it like this now, and we would need to look at this as 5 waves down here if that was going to be the case. So probably 1 and 2 in here, and 3 and 4 and 5 here to be sort of hopeful in that regard. Yeah, and if that's the case, we can also look for, you know, long trades further down here. We'd need to get a bit more confirmation. We couldn't go buying on the low here for this because it would be, the risk would be exposures. Just not worth it. The recovery time is too long. Yeah, we're seeing further weakness in gold here now, and it doesn't mean that it's bearish, but it's got, you know, it puts it one step closer to being bearish, and moving out of this trend line is also not a good thing as well. This trend channel, so that's a weakness there. So we could look at it as an A and a B and a C wave here, a little bit sort of rough and ready, but we'd look at this as wave 1 here, wave 2 here, wave 3 here, wave 4 here, and wave 5 here for the A wave, and A, B, C for the B wave, and down here for the C wave here. So I was hoping that we'd push up and we could just get on with it, but life is not always as simple. So now we're just, we have to play this out through here now for this. Yeah, that's the best fit. Okay, so we'll pick up that next session for that. So it's not all over yet for the bulls. We'll see how we go. We need to have a look at silver. So the same thing with silver here as well. In the bigger picture, there's different ways to count everything. But if we're going to be bullish with gold, then we'd be bullish with silver as well. Not that they have to be moving together. You would think that they would, but because there's so much paper money out there controlling the physical, it makes it a little bit difficult to understand who's doing what. So it's definitely a controlled environment, well, all the metals are controlled really to some point by somebody, by some, some cartel has got everything covered. Not everything covered. Every sector has got its little cartel that that dictates certain amounts of things. Yeah, I wonder when the Indian wedding season comes into play. That's probably, check on that. That's 50% of gold, isn't it? I mean, expendable gold, people buying gold for that. That's 50%. Look, the same thing here as well. We'd been through a process of getting 5 waves here, so we figured we'd get another 5 waves over here for this. And we've got that, and we could label this one 1 and 2 and 3 here, or up for 1 and back for 2, up for 1 and back for 2 here, all that sort of thing. But the only way we could get past this being a wave C here, which was the clincher for all of this, was taking out the top here. We can bring that down and we can look at this one over here now, but this level here, this is the medium level here. Then we've got group 2 here, 65, 72 and 80, and it's really trying to get back in here to the 65 to find support. Let's just go into the hourly chart and check on this. We've poked around with it, and we've got trades in here. We had a long trade here, original stop here. We've brought the stop up to break even here for that. We're looking to go long here again for that. We can go long on this top here for that here, but we're probably going to see this in some light. I mean, I could be wrong, but down here for this and then up, if that's going to be the case. Same as gold. So yeah, it still can all be bullish. It's just that we may end up being bearish here for a tad longer. So I mean, I've counted this up here as wave 1 here in blue, wave 2 here, and wave 1 and wave 2 here, which is all doable. It's a little bit smallish for a wave 3, especially wave, how far would wave 4 have to come back to for that top there? Oh no, it could stay clear. We wouldn't want to see wave, that's the 38.2% retracement level here, so we wouldn't really want to see wave 4 come to, if it was going to be 1, 2, 3, 4 and 5 moving up, which it could be. We don't want to see it overlapping the top of wave 1 here to start with, so it needs, that's the 38.2% retracement level, so it really needs to stay above that. So I think this, there's nothing to do here really. Again, we just need to wait. We can buy new highs, but that's about it at this stage. Yeah, I can't sort of add anything to any of this, because we have to get past this point in the puzzle to understand the direction. Yeah, so I'm not going to be bullish, I'm not going to be bearish. All we're going to do is buy new highs. And it's possible for this to move down through here because gold is looking a little bit weak at this point. This can be labelled in different ways, 1 and 2 and 1 and 2. It could be an A and a B and a C. It could also, in this case, be 1, 2, 3, 4 and 5 going up here as well. Not that none of that's sort of helpful for us, but getting past this 3-wave move here will tell us that we're moving into an impulse wave and we're not in a corrective rally at this point. So we just got to get past that. It's been the same story, all through here. It's been the same story. And it will just continue to be that until we've got a change in story. And that means that we need to make new highs here, or we find the 1750 on gold or this level here become the retested resistant. And then we know that we're in a corrective, this is a corrective rally. And then we know that we'll be making new lows below here if that's breached, if it becomes the resistance rather. Alrighty, sorry I'm not the bearer of good news, just more patience, and young folks don't want to hear about that. It can even be a bit boring for old folks too. But look, the market is the boss and we're just the slaves, and we need to do what we're told, and we should be all right. Alrighty, cheers.